Hi there, I'm Mark Sebastian, founder of Option Pit, and this is the Vol Report. Reminder, this is for education purposes only. Should not be considered investment advice. Options have risk. Well, let's talk about the world. Well, here we are. We're down 5. The VIX is up big. We continue to see this vol short squeeze, almost entirely created by mostly upside behavior. So a lot of buying and upside. We have the VIX at 1220. Meanwhile, we have a future that expires on Wednesday. Take a look at this. This is kind of fascinating. We have a future that expires on Wednesday, trading at a 40-cent premium now. And we've got the next week also trading at a premium, a basically flat. So while VIX is squeezing, there's definitely kind of some weird funkiness going on in front month contracts. I'll tell you, as I look at the VIX complex, it's hard not to look at the 11.5 calls that are trading 55 cents and not want to own some, as they're going to be 15 cents in the money. And I'm not sure if VIX backs off while we're running into all this earnings season. So something's got to give. Either there is going to be a comeuppance for the volatility index, entirely plausible, or this Jan contract is way, way, way too cheap. And so either the squeeze is off, or we're going to be seeing this Jan contract move up significantly. Right now, if you look at the price action of the VIX futures, they are not acting like it's the former. So I look at some of these individual calls, and I see some value there. So I'm going to be playing in that today with my group, some sort of little exploration play. And something to understand is this is after the State of the Union address. Maybe we're rallying ahead of the State of the Union, which is tomorrow. But we also have a slew of earnings. The big reason why VIX has been rallying on this rally, there's some demand for calls. Why? Well, take a look. We have earnings in Apple, Amazon, Alibaba, Facebook, Google, Microsoft, almost ExxonMobil, Chevron, Texaco. I believe 8 of the top 10 names, pull up CBX, 8 of the top 10 names report this week. The only ones that are not, that have already reported, I believe, are Procter & Gamble is not reporting this week, and I don't believe Walmart reports this week. But outside of that, you've got almost everybody. So there is, if you're wondering, well, why is vol acting the way it is? Well, have you considered that, part of this may be the fact that there's also a ginormous amount of earnings data coming out. So, they tried to unload on the S&Ps this morning. We opened up down about 8. It's running into this 2870 support. If we break that, we could really move significantly higher today. There's still an underlying bid in the market, even with volatility rallying. But who knows? I mean, maybe today is the day we take a breather. All I know is I look, and I've yet to find a floor in this market. Apple, which is getting torched this morning, looked like a nice little day trade there on the open. They pushed it down as much as $3.50. I think it was a purchase down there. I think it's probably still a purchase here. To consider, the Feb 170s that do have earnings this week, the Feb 2 170s, trading around $3.50. Well, Apple's already moved more than that today. If we get a dollar rebound, these are going to be worth a lot of money, and the volatility is not going to come in. So there is a real bid there. So there's a lot of moving pieces. This is a really strange market. We've got a lot of consolidated earnings. It was nice when Apple was not this week and was the previous week. I would hope that they move back because we just have a concentrated amount of data. And then let's not forget Friday morning, we also have non-farms. This is a crazy amount of stuff hitting this week. I mean, just so 8 of the top 10 companies in the S&P 500, State of the Union address, non-farm payrolls. All we need is a Fed decision in here, and we'd be there. But this is like a tsunami of information week, and so that is why part of the reason we're seeing the VIX act away. On top of the fact there is a bid on upside calls. I mean, the S&P. Take a look at the chart of the SPX. There is just a phenomenal bid, and I don't blame him. This is off to the races. So, you know, on top of the fact that the S&P is just moving higher, volatility is there's a lot of reasons for vol to be higher. Now, that said, do I think 1225 is the appropriate VIX? Probably not. I still think by the end of the week, there's a decent chance VIX is below 10. But that said, if earnings go abysmal, where would VIX go? If we sell off 14 points, where does VIX go? It could go to 18 for no reason on a 20-point sell-off. There's just so much wall of worry here. It will dissipate, but I don't know when, and I don't know what that'll look like. All right, folks, if you got questions, you can email me, marketoption.com. You can call me 888-TRADE-01. Have a good one.